So like I said, we're going to talk a little bit about investing in commercial real estate hands-off or passively. Just a legal disclaimer, this is purely for educational purposes. I'm not offering any securities. Okay. So a little bit about myself. These are both my kids here. I'm a father of two, husband, and I've been investing in commercial real estate since 2012. I'm proud to say that I am a corporate dropout. It's a term that I was just on a podcast earlier last week, and the person I was on there with coined that term for me, and I think it fits in very well. And I'll talk about it a little bit more in a second. And you know, I've most recently, as I mentioned, started my investment firm called Hands Off Investment. My mission is to impact 1,000 families to move closer to financial independence. And that's just if I can provide one piece of value to someone, that's all I'm looking for. It's just one person at a time, one family at a time, add some value to them to help them improve and move towards that financial independence and growth. So this is my corporate background. I've been in the corporate world for almost 15 years. I was in the automotive world prior to consumer goods, but I've been working for these two companies for the last 13 years until leaving recently. So I was with Mars for 8.5 years. I was managing a $250 million portfolio when I left there. And then with Mondelez, I was there just over 3 years, and I was managing a $600 million portfolio. I mean, you guys can see a lot of the brands there. Oreo, Ritz, you name it, Cadbury, M&M's, stuff you guys probably have in your pantry right now. It's
definitely,
a lot of speakers have touched on this, and Chris earlier as well, because he's from the corporate side. I'm from a South Asian background, so it was very much become a doctor, lawyer, accountant. Even though I had all the success that I had, and I went to university for finance and accounting. My mom was still, even like 3-4 years ago, say, "Hey, why don't you do your accounting degree?" It was hard for her to understand why or why not. And then it was, why don't you do your MBA? Because I accidentally one time said I was thinking about it. What she failed to understand was, based on the positions that I was in, I was already doing senior roles that even MBAs couldn't get. Right. So it was just being in this kind of the mindset of, maybe it was ego driven or whatever it was, that, hey, look, I'm working for all these brands, and it's so cool. I go talk to somebody, like, hey, yeah, I work for this company, and we own these brands, and I, for the last 13 years, have a whole carton full of chocolate and candy and you name it for Halloween and Easter, and for every occasion, Christmas. But all the while there was something missing. And my last 3 years at Mondelez were a little bit tougher, because I was commuting almost hour and a half one way. My older one was, I think, only about 2 at the time, and my younger one was about to be born. I would leave about 5-6 in the morning and get back 8-9 at night. I was not seeing my family at all. Luckily, my parents were around, so they were helping. My wife, she's currently doing her medical residency. So at that time, she was studying for all her boards and everything. So it was a tough time, and I just wasn't spending any time with my kids. And it was very much a, what am I doing this for? Why am I doing this? It wasn't serving my purpose. So I just wanted to touch on that because of some of the things other speakers have said. Come up with your why. Why are you doing what you're doing? And then that will help you progress further. And that's one of my reasons, the mission behind helping 1,000 families. When I was working there, I didn't have time for anything else. I didn't look at, what type of investments or anything like that. It was just go work, presentations, meetings, and back home. So I actually started investing in real estate in 2012. This was the first property I purchased. I lived in it. I, you know, rented it out while I was living in it. I refinanced it, so I did like the BRRRR, the house hack, and all of that before those are terms. But you'll hear a lot of people saying, they got into real estate a few years ago and then they all of a sudden, have this huge portfolio and everything. Unfortunately, I was so focused on becoming that CEO, I didn't take advantage of it. I did over time build up a few properties in my portfolio, doing single family conversions to legal duplexes. My whole goal was, have a few of these properties I can get ready for retirement. When I retire, they'll be paid off. I'll live off, which is all well and good, but it's still focused on my corporate career, which, Chris touched on it too. Who am I leaving that legacy for? And that was on my mind more and more over the last couple of years. And so basically, that led me to doing what I'm doing today. We all know what the advantages of investing in real estate are. The one thing, why I want to look at commercial real estate is the economies of scale. Doing this one at a time, you have a lot of equity tied into it, and it's just one place. You don't get it fixed on time, you don't get it rented on time, you can be in a little bit of trouble. Versus buying a larger commercial space, you can plan it out. You're not going to have 100% vacancy while you're trying to fix things up. So that's why I love commercial real estate. So going into a little bit about commercial real estate itself, you have a bunch of different property types that I mentioned before. You have your multifamily, mobile home parks, office buildings, golf courses, retail, hotels, resorts, medical, assisted living, industrial, storage, student housing. And going back to the point, there is no way you can do all of this yourself unless you have experts in each area working with you. It's not possible to be an expert in every area. I haven't met a single person that is.
Neither have I.
Exactly. So, people say focus on one thing, and that's very, very important. Focus on the one thing. If you can do everything yourself, or partner with people that have the experience in that area. All right, so there are a few different property classes that you can get into within CRE for each. It pretty much goes for a lot of the property types there. Your class A's are your newest, best looking, aesthetic, age, quality type building. Your class B is kind of a little bit older, within last 10, 20 years. They're still in decent shape, just need some minor value add stuff. And then you have your class C, which is, over 20 years old, could be in a bad area as well. So it just needs a lot more work, basically. And then you have a few different strategies you can utilize on your investment. You have your core, which is, well-developed, well-maintained, income-producing property. That means it's, brand new, is fully rented, is in good shape. A lot of your institutions look for this because they just want to park their money somewhere. They're not looking for the higher returns. Then you have your value add, which means you need to put some work into it to fix it up. It could be minor upgrades or major. It could be class B or C. It could be class A as well, but it means there's more work needed. That's your value add. And then you have your opportunistic, which is kind of looking at different areas, opportunity zones. They don't, right now, they're not as economically successful, but they are target for gentrification and future work, government, whether if it's government assistance or whatever it is. It's just, that area is going to get better in the future. So that's your opportunistic. And then kind of, what is needed to buy a commercial property. You definitely need a good team, the knowledge and experience, lots of time. The main reason why I'm doing this full time and not part time. Financial backing. If you're buying properties, like especially larger ones, 100 unit plus, could be 10 million, 15 million, 60 million, etc. And you definitely need a network and a lot of resources as well. So kind of going over just high level, what's the work that's involved? You have to determine, which market you're going for. Is it a growth market? What are the economic indicators look like? What's the job diversity, population growth? You have to search for the market, search the market for the attractive properties. It can take you over underwriting over 100 properties before you get one that works out. You have to implement the business plan, then management needs to figure out what exactly is going on in the area and the property, to look at what needs to be done, go through all the leases, and look at how to restructure that, managing the tenants, and creating other efficiencies within the property. End goal at the end of the day is increase your net income so you can sell the property for a higher price than you bought it at. And then at the end, you're refinancing or selling the property.
So this is a great overview I know that some of you on the call are active investors, but this is a great refresher for those who are passively investing or have thought about commercial real estate, because a lot of multifamily people will talk about this process, but it really is across the board of all commercial properties. So it's a great reminder. And I also want to note, as Hamad had said, team and resources and your network are so huge, because all these boxes could seem daunting, but each one could be a different person. You really can, encapture your team in getting this done, because you could do this process a lot of different times. You can do the first like 3 or 4 boxes like 100 times. So
yeah, exactly. And there's so many other nuances to capital raise I'm not touching on. That's a big part of it as well. You have to have a large network to be able to do that too. So there's many things and why you need a larger, the network, the resources, and a team to be able to pull this off.
Exactly.
So now getting to the point, why we're all here, it's how do we do this all hands off for at least a passive investor? I talked a lot about what you need to do for the active side. So one quote that really sticks out in my mind is the Warren Buffett one. If you don't find a way to make money while you sleep, you will work until you die. Even though I'm doing this actively, my goal is one day to step away from it, to let it run passively and invest in other opportunities passively as well. Oops. So commercial, the answer to that is commercial real estate syndications. So what is a syndication? It's also known as a private placement. Basically, instead of stock exchanges, you're doing it through a private placement. Investors are investing directly with the offering itself. So if operators like myself, they have a deal, they'll bring it to you. If you're interested, you can invest with them, and that's the public offer, the offering there. And they are limited to higher financial profile and also relationships. Everything, all the capital raising is regulated by the Securities and Exchange Commission. So there are strict rules that apply that you would need to qualify for that. So it's either you need to be an accredited investor or a sophisticated one. Now for an accredited, basically this is determined by the Securities and Exchange Commission, and they, this is a quote from them. It's in the context of a natural person. It's anyone that has earned an income of higher than 200,000 or 300,000 if you're married with your spouse in the prior 2 years, and it needs to be reasonably expected over, coming up in the current year and ahead as well. And then either that or your net worth needs to be $1 million. And then there are a few other clauses that SEC is included as well, updated as well, which includes you have certain licenses and stuff. I'm not going to get into that right now, but there are a few other things that would qualify as an accredited as well. And the other one is a sophisticated investor. Now this is there's no hard and fast rule for sophisticated. At the end of the day, it's just for per SEC, at least, it's you need the experience and the education to manage your finances. For myself and my business, I if you're single, I hold it to about 100,000 or 200,000 minimum with a spouse, or net worth over 300,000. And the reason I do that is my philosophy is more, you shouldn't be investing everything into syndications. It should be within general diversified portfolio. Should be investing about 20%, maybe 30% into real estate. And if you're spending your last $50,000 on this syndication, that's not recommended. That's why I hold it a little bit higher. And if you have a conversation with me, that'll be one of the questions I ask is, how much total do you have to invest and how much of it are you investing today? Because there is risk associated like any other investment with real estate as well. It's not risk free.
So on your end, what is the reason why you'd want to know if someone's sophisticated or accredited on top of what you just said?
Yeah, so it's I didn't touch on that today, but it's basically SEC has different types of offerings that you could do. It can be a 506B or a 506C. 506C means you can only have accredited investors, but with that, you can advertise it openly. With 506B, you can have sophisticated investors, and with 506B, you need to have a prior existing relationship, and you can have 35 non-accredited, so sophisticated investors in that offering. Again, like I said, you have to have a relationship with that operator, at least I would say a month in advance of that offering coming to that operator, and then be sophisticated in one way or another as well.
Awesome. I point that out because if you are interested in investing, then it's good to know which category you're in, because like he said, a lot of deals you can only do 35 of the sophisticated investors. And so it's who you know and knowing which category you're in to know if a deal's even an opportunity. So it's super helpful. Thanks for pointing on that.
Based on what my mission is and what I'm trying to accomplish, that's why I've set up my business the way I have. Instead of going out finding the properties myself, I'm trying to go out there and find as many operators as I can so I can bring my investors the best possible deals, because your busy professionals, they don't have the time to go out and learn about every single operator, get the experience there, and do the background on all of them. You just don't have the time.
Yeah.
So that's where, what I do is I kind of circumvent that, and I build a relationship with the operators and I vet out their deal, because not every operator has the best deal every single time either.
Which is so helpful. Once you start looking into, if you haven't already, looking at deals, what Hamad is offering is, you can really, be hands off. That's super amazing. We review a lot of deals for ourselves and from other people, and it's time consuming. So that's amazing.
All right. So the syndication structure, and this is, I would say, if you take away anything, this is the most important. If you're doing, investing in any type of syndication, this is the most critical document. It's a very big document. It could be anywhere between 100 to even 200 pages, but read every word of it. Right? Syndication is hands off. If you have to do any work, I would say it's underwriting the deal. Even though I've underwritten it, the operator's underwritten it. I tell my investors to learn about underwriting as well, just so you know what questions to ask and whether if it fits your investing style and profile. And then this is the second thing you have to do no matter what, because this will talk about, it's your governing document for the investment. It will lay everything out there, including the risks, anything and everything to do with the deal and how the operators are looking to do distributions or the business plan and the risks. Everything will be in this document. So please, if you do invest passively, read the document. And then, the benefits, I would say, why syndication, unlike, REITs, ETFs, mutual funds, you have a line of communication with the management team. You can call, you can email, and it's not correlated to the stock market. And and best of all, it is a hard asset. If you want, you can go visit the property. We don't suggest you go start knocking on people's doors, and you arrange it with the operator. And if one of the days they're going in for due diligence or property touring, they can tag along with them for sure. Okay. So yeah, that's all I had for today, Valerie. I just want to add one thing, and I'll add it in the chat as well. I do have a Facebook group. I literally just created it this weekend. I think I have over 90 people in there already. And I'm looking to start doing kind of bringing experts in similar to today's summit. Do half hour, basically them talking about themselves and what they're doing, and educating the investors, and then half hour of question and answers. Again, it goes back to my mission of helping 1,000 families improve their financial situation and gain financial independence. And my goal is hopefully retire early, or even start doing real estate more actively if that's what they want.
I love this. I mean, just kind of a recap, what Hamad has created and is offering is kind of bridging that gap. As a passive investor, there are still lots of pieces for you to implement to find that solid deal. And as we saw in the last few years, who your operation management is so important, because multifamily did do well, and a lot of other commercial asset classes did do well, but there's a lot that really didn't. And there's even some that in the strong asset classes that didn't do well because the syndication team was not prepared. And so what he is, doing is literally helping you bridge that gap to find the people who are truly going to make sure that their investors are set up and they are in a strong position, and finding you that asset class that you want in your portfolio, and it's stabilized. So that is amazing, because raising money is a huge piece of commercial investing. So I was just going to say, if you're also an active investor and you're looking for raising money, I mean, Hamad set it up for you. So a great person to have on the team.
And the one thing I'll add is, if you're going out there investing passively, really look at the experience. And one thing to watch out for is, over the last 5 years, 6 years, especially the last few years, it was hard to mess up and fail and not show good numbers. Like, we've just had so much appreciation. So really look at, was the operator able to achieve the business plan that they had set out? That's what you need to look for. And with the deals in the market right now, I was in the corporate world doing finances and forecasts. Trust me when I say this, you can make the numbers look as good as bad as you want. Literally, I would sit around all night, a meeting every month, and we would start our, calculating the numbers 2 weeks in advance. I would still be changing numbers the night before our meeting. Not myself, my team, but it's, just goes back to, you can make the numbers look as good or bad as you want. So know your underwriting, so you can ask the right questions to know, how the operators are coming up with certain scenarios.
I love that. Yep. Know your numbers and your operators. So we had a quick question that I'd love to ask you, and then we're going to wrap up. And I really do want to encourage all of you. Hamad has created so many educational pieces. So there is a lot to it, and he really wants each and every one of you guys to understand the ins and outs. And so you are in control of your investments. So that's so amazing that he set all that up for you guys. And we had an awesome question come in that I do want to say, from Alden, and he asked if you're doing long-term or short-term investments.
So it's syndications can be, I would say, generally is 5 to 7 years on average. A lot of them have been closer to 3 years in the last couple of years, just because of the appreciation level and hitting the business plan earlier, so you can refinance earlier as well. But I would say on average about 5 to 7 years. I know I want to move in the future to basically a buy and hold. That's going to take a little bit more time, because when you are pooling money with so many different individuals, you can have anywhere from 30, 40, 50, 100, depending on the size of the deal. It's harder to do that. So right now, it's on average, I would say a midterm hold, about 5 to 7 years.